This is the true story of the Great Recession of 2008, the crisis that rewrote the rules of the global economy. I'm Michael, and this is Smart Money Hub. If you really want to understand how finance works, the force that moves governments, banks, and markets, you're in the right place. What you're about to hear isn't just a story about a crisis, it's how a system, seemingly perfect, collapsed on itself. Stick around because the end explains why it could happen again. It all starts with a simple dream: owning a home. In the US, you need a mortgage, and for that, you need a credit score. It measures your financial reliability. You must prove you have a stable job, sufficient income, and a good credit history. Most importantly, you need collateral. If you don't pay, the bank takes the house. This system worked until the early 2000s. Then, in 2004, everything changed. The Federal Reserve slashed interest rates from 6.5% to just 1%. Money became cheap. Loans became easy. Banks began issuing more and more mortgages. At first, it seemed normal, but then it got dangerous. To issue even more, banks lowered their standards. They gave loans to people who weren't reliable. The subprime era was born. Some were called ninja loans. No income, no job, no assets, zero requirements. How long can a system built on bad loans last? Tell me in the comments. At first, it looked like a win-win. Real estate prices soared. Banks felt safe. If you didn't pay, they'd resell the house for more. But it goes deeper. Banks packaged these loans into tools called CDOs, collateralized debt obligations. They sold them to Wall Street for immediate cash to issue even more mortgages. It was a continuous cycle. The problem? These CDOs mixed safe loans with toxic ones. Yet, rating agencies gave them a AAA, the highest safety rating. Why? Conflict of interest, competition between agencies. High-risk assets were sold as safe as gold. Enter Michael Burry. If you've seen The Big Short, you know who he is. Burry realized the CDOs were doomed. He bet against the housing market using credit default swaps and insurance against failure. Then, the Fed raised rates again. Variable mortgages exploded. Payments jumped by 30%. Millions couldn't pay. Foreclosures began. The houses went back to the banks, but now there were no buyers left. Real estate prices plummeted. CDOs lost all value. Banks were holding mountains of toxic debt. On September 15, 2008, the unthinkable happened. Lehman Brothers filed for bankruptcy, the largest in history. Markets crashed. Panic spread everywhere. The global financial heart stopped beating. The next day, the government bailed out AIG. They were too big to fail. They had sold massive CDS amounts without any reserves. Between 2008 and 2009, 8 million Americans lost their jobs. Millions lost their homes. Global GDP collapsed. Europe entered a deep recession. World trade contracted by 12%. It was the worst crisis since 1929. This crisis wasn't just born from greed. It was born from financial ignorance. People signed contracts they didn't understand. Banks built an unsustainable system. Agencies ignored risks. Regulators reacted too late. Have we truly learned? Every crisis starts when everyone believes this time is different. Are we building a new bubble today? If this helped you understand the system, subscribe to Smart Money Hub. We analyze the crises you can't afford to repeat. I'm Michael. I'll see you in the next video. Remember, finance isn't complicated. It's just dangerous when you don't understand it.